Hello, and welcome to session 4 of Moms on the Money Trail. Today we're talking about big purchases like buying a new car or a new home. Many of you have indicated throughout the other sessions that that is one of the goals that you have to be able to reach very soon after you finish this program. So I am excited that we are finally here and we're going to be talking about quite a few different considerations that we need to make when we start to think about what that might look like. So, we're going to talk about how we can prepare for these big purchases. We're going to talk a little bit more about checking our credit, the process for buying a car or a home. We'll talk about a thing called predatory loans, and we'll provide you with some resources on where you can go for help. So let's start out by talking about how exciting it will be when we start to think about a new home or a new car. But I want you to stop and think about, can you afford that new payment? So maybe you're paying $1,200 a month for rent, but your new home is going to cost you $1,500 a month. And that does not include taxes, insurance, and home repairs. So that's what I mean when I say that you need to plan for the unexpected. So when we start to think about that process, it's important that we actually look at what a new spending plan might include and what it might look like. So hopefully you are well on your way to putting together a spending plan for your current financial situation, for your current bills, so that you can start to plan for those investing things that we've talked about for the first 3 sessions. So now I want you to come up with a new budget, a new spending plan that actually includes what you would be spending if you bought a new house or a new car. Because the reality is that these are expenses that go along with both of those new things. And so you're not only going to have a new payment, but you're also going to have a different insurance premium. You're going to have maintenance that maybe you didn't have before. If you've never owned a car of your own, now you're going to be looking at um, registration, taxes, inspections, oil changes, new tires. Those types of things really add up, and we want to make sure that we're financially prepared to be able to make those payments. And then emergencies happen more often than you realize. So you're going to want to make sure that you have that money set aside as well. For instance, if you are involved in a motor vehicle accident, you may have a $500 deductible that you're going to have to pay before your automobile insurance is going to cover the rest. You may have a hot water heater in your new home that goes bad and leaks all over the place. Then you're going to have the mess of cleaning that up. And not only is that a mess, but it's also going to involve some expenses. So you want to make sure right off the bat when you're thinking about this that you start planning to put money aside to be able to do that. But I'm not sharing this with you to frighten you or make you change your mind about whether or not you want to buy a home or a vehicle. I just want you to go into it being aware of the things that you need to consider. So, the Consumer Financial Protection Bureau, which is a federal agency that offers quite a bit of consumer financial protection resources, and they actually have a really great website that gives you step-by-step process for buying a home. So some of the things that I found on their site as you're preparing to shop for a home is that you want to check your credit. You want to see how you're spending. And then, like I already said, budget for the new or changed expense. And you also want to know how much you're willing to spend. If you go to a lender is very likely to pre approve you for a certain amount of money that you can borrow. But I always caution borrowers because they may pre approve you for a much higher loan than you can, in reality, afford to pay back. So I want you to make sure that you keep that in mind. Just because you're pre approved to buy a $500,000 house does not mean that you should run out and spend that maximum dollar amount. It means that you should really consider how much you can truly afford. You're also going to want to think about the timing. If you are coming up to a time frame where you're going to have a lot of expenses, that might not be the greatest time for you to buy a home. If you are, are currently the interest rates on home mortgages has been pretty high because of inflation. But the good news is that the feds just lowered the rate for the first time in many years. The reality is, it's expected that that rate is going to come down at least one more time before the end of the year. Might it make sense to consider that home purchase when the rates come down a little more? You're also going to want to think about your down payment. If you don't put down a minimum of 20%, there's a strong possibility that you're going to have to pay um, mortgage insurance because you haven't paid down enough of the debt. And so you might have to pay PMI, which is private mortgage insurance. So that's something that you want to consider. You also want to build a network of people that you trust. You want to make sure that the people that you're working with are looking out for your best interest and not the interest of their pocketbook. Again, you're going to want to think about how much you plan to spend, and then you're going to get your loan packet together. And you can see here the CFPB's website is consumerfinance.gov/owning a home. And you're going to get this information by PDF when I send out the recorded link of today's session, along with the quiz and the PDF for the slides. So, one of the first things that you want to do when you are starting to put your loan packet together is you want to pull your credit report. Now, this should not be new information for you because we talked about understanding our credit reports and scores just 2 weeks ago. So you're going to go to annualcreditreport.com. Remember, they do not give you your credit score. They give you the report for you to make sure that the information contained within it is accurate. So when you check your credit report, you're going to check all the names, addresses, employers, and all other information about you is accurate. And then you want to check to make sure that all of the accounts are yours and that the payment history is true. If it's showing that you're delinquent and you've never made a late payment, that can really impact your credit score. Your credit score is critically important when you're starting to think about buying that home or that car. So you have to make sure it's all accurate. And then look at limits and balances for each of those accounts. If an identity thief has actually been able to get information about your credit card, they may have run up bills that you maybe are not aware of. So you have to make sure that you check that information as well. And if you find information that's not right, you need to report it immediately directly to the Credit Reporting Bureau. And when you're on that site, annualcreditreport.com, when you're looking at your credit report on the computer, you can actually dispute information that's contained on your credit report directly online. But if you think you're a victim of identity theft, there are a few things that you need to know. You need to file a police report with local law enforcement because that's going to give proof to what you are claiming to the lender or the creditor that's showing up on your credit report. You also want to contact all three of the credit reporting bureaus, Equifax, TransUnion, and Experian. It's critically important that you report it to all three because computers don't always do what they're supposed to do. And sometimes they don't report to the other two. This is your credit report, and it is incredibly important that the information is accurate across all three. So you also want to contact security or fraud departments for any of the companies that have inaccurate information listed on your credit report. That way they can adjust their records. At that time, you may actually have to provide them with a copy of that police report or the police report number so that they can get a copy to ensure that you are actually a victim. If you find accounts that are not yours, maybe someone opened a credit card account in your name, or they took out, maybe they opened a cell phone account. That information can be reported on your on your credit report. If that happens, you want to close those accounts. And you want to make sure that there is a note included on your credit report that says this account was not mine. Because if you just close it, it actually could bring down your credit score because closing a bunch of credit on your credit report can actually indicate a potential problem and it can lower your score. If there are cards that have been compromised or accounts that have been compromised, you want to cancel those cards and get new ones. You also then have to make sure that you go back to any bill payers that are set to automatically pay and change those card numbers because those transactions might be denied if you don't remember to do that. It's also important to keep a notebook. Record everything that happens. Start with the date and the time, and then explain. On October 20th, I realized that there was an account with, ABC credit card or ABC big box store that did not belong to me. I reported it. I disputed it on my credit report. I reported it to the company. These are the things that I did. And then as you report to each of those things, make a note. On October 23rd, I spoke to Sally from ABC Big Box Store Credit Company who told me this. And then keep notes of what was said. Eventually, you're going to start getting mail, and you're going to want to make sure that you put any mail, anything that's related to that identity theft in your notebook. Because when you're ready to make that next purchase, when you're ready to buy that house or that car, having that notebook can prove to a lender that you were actually a victim of identity theft and these accounts were not yours. That can go a long way in ensuring that you are approved for the loan that you're trying to get. And then finally, I always suggest that you talk to someone that you trust about what's going on. I just gave you a list of 7 things that you need to do in order to recover from becoming a victim of identity theft. That's a lot to remember. And when we're victims, we can find ourselves emotionally distraught and we may forget to do one of these things. That can have long-term effects on our credit if we don't make sure that we do it all the way we need to. So talking to someone that you trust can be really helpful. If you're in this process and you find that you're a victim, you can also always call my office at 800 PA Banks, and one of my consumer services specialists can help ensure that you're doing everything that you need to do. So let's move on. Let's talk about what we can do if our credit score isn't quite as strong as we want it to be. Because we're going to see in a few slides just what a difference our credit score can make in helping us to get a loan at a better rate. So the things that you can do, you want to always make sure that you pay your bills on time. I always suggest trying to pay them at least a week or so prior to the due date so that there's time for it to post to the account because you don't want to risk late payments. You also want to limit how much of your available credit you're using. So let's say you've got $10,000 worth of credit cards available to you. Having your credit cards maxed or having less than less less than $1,000 available credit actually can bring your score down as well. But keeping the credit utilization, that's what they call that, below $3,000 on $10,000 available is kind of a sweet spot, because it shows that you can use your credit without overusing it, and you're going to consistently make those payments. So making sure that you keep that in mind is really important. And then the length of time that we have an account open is going to give us a stronger credit history. And credit history, we learned last session, is a big part of our credit score. So keeping those credit card accounts open that you've had for a long time is really helpful, especially if you have a history of making those payments on time. You can also be careful that you don't have too many open accounts. Nobody needs 14 credit cards, right? You want to make sure that the information on your credit cards is completely accurate. If they show that you missed a payment a year ago and you don't believe that you did, you need to reach out and you need to make it right because that missed payment can bring your credit score down by a few points. And then finally, opening new accounts right before you make a big purchase can bring down your score kind of significantly. So if you know that you're going to be taking out a car loan or you want to buy a house, I would encourage you not to open new credit cards or other types of accounts when you know that you are going to be buying something major in the next few months. Because again, you don't want to risk that new credit pulling your score down. All right. So this is where I really want to emphasize how the difference of 100 points can really impact um, your payment and how much you're spending for a car. So, or so this example is on a mortgage. If your score went from 780 to 680, um, that could add $69 a month for a $300,000 mortgage. Now that doesn't sound like a whole lot of money, right? However, 69 times 12 is $820. If you take that times the life of the loan, that's $24,000. You could buy a car for that much money. Imagine the maintenance costs that could be covered with $800 a year on a house. That's why it's important to make sure before we start preparing to buy that purchase, important that we start to really look and make sure that everything's accurate so that you have the best opportunity you can to make that purchase. All right. So I want to warn you about credit repair scams. Prior to my doing outreach, I worked in our consumer services office, and I can't tell you how many people actually fell victim to credit repair scams. They will advertise, especially if you start to do things to improve your credit. You might start getting emails or postcards telling you that they can help you repair your credit. And they may tell you they can guarantee it. And then they're going to ask you to pay really high fees up front. So they may want $500 before they even talk to you. And then they're going to tell you not to contact any of the credit reporting bureaus, and they'll help you dispute everything that's on your credit report. Now, the big danger for that is if you dispute credit derogatory remarks on your credit report, that is actually true. So if you say, I never had this account, it's not mine, and it really was your account, that's a felony offense. That's a fraud. You need to be aware of that. So if a company tells you to dispute all of the bad remarks on your credit report, those are some pretty hefty fraud charges you're going to be facing. So you want to make sure that you don't do that. Um, or they may tell you to give information that's not true when you apply for a loan. Like they might tell you to say that you make more money than you actually do. Or they may encourage you to use a spouse's income even though your spouse doesn't live with you. Anytime a company tells you to do something that's untrue, that needs to be a red flag. And you need to know that if you submit things on a loan application that aren't true, that can also get you into trouble. Despite the fact that you might get approved for a loan that you really can't afford. So that's something that you want to make sure that you consider as well. We also want to talk about how easy it is to make a purchase with no down payment. And that's especially true for a car. I hear so many lenders that say, no down payment, no problem. We'll get you a loan. That's a really scary statement. Um, and the reality is that if you do those things, it can wind up costing you thousands of dollars over the life of your loan. And so here's what I mean by that. Let's say you're purchasing a car for $25,000 and the annual percentage rate that you're going to pay, the interest you're going to be charged is 5%. If you don't put any money down, your payment is going to be $542.55 or thereabouts. Um, you're not going to save any money over the course of 5 years. Um, Now, let's say you put 10% down. So 10% of $25,000 is $2,500. Your payment's going to go from $542 to $495, which is almost 50, that's more than a $50 a month payment difference. overall, you're going to save $330.69 in interest by having paid that $2,500 down. Now, let's take that and double it, and we're putting $5,000 down. We're putting 20% down on our car. That's going to bring our monthly payment down to $448, which is almost $100 a month difference. And your interest savings over the life of the loan is $661 over 5 years. That's a pretty big savings. Think about what you could do with an extra $661 that you saved over the course of 5 years. Imagine if you took that savings and put it into an investment account and let that investment account grow over the life of your investing life until you're ready to retire in 20 or 30 years. That money can really see some significant growth. So that's why, making sure that you save money to put the down payment on a car can be so helpful. I want to switch gears and look at the same concept for a $250,000 home that you're buying. For 30 years, you're looking at 5.9%, 5.98% interest right now. If you put nothing down, your monthly payment without that private mortgage insurance is going to be $1,921. In addition to that, you're going to have $104 a month PMI, that private mortgage insurance that I talked about earlier. So you're looking at over $2,000 a month. If you save $25,000 for that down payment, your mortgage payment is going to be $1,771. And because you haven't put 20% down, you will still have that PMI, but instead of $104, it's going to be $94 a month. And instead of having to pay that for the first 11 and a half years of the mortgage, you're actually only going to have to pay that for about 7.5 years. So once you get to those points, that PMI comes off and your mortgage, actually the amount that you have to pay is going to come down. But note that I did not include the PMI in the breakdown that you see on the screen. So in interest alone, with 10% down, you're going to save $961 a year. That amount of money can go a long way in maintenance fees, right? If we think about it from that perspective. But over the life of the loan, you're going to save almost $29,000. That's a huge difference. Don't you agree? Now, let's look at the next scenario where we put 20% down and you've got $50,000. Your mortgage payment is going to be $1,622, and you're not going to have any PMI. So you don't even have to worry about that extra $104 a month. Your mortgage payment is going to be $1,622. In interest alone, for every year, you're going to save about $1,900 a year. That's a lot of money. But if you calculate that out by 30 years, you're going to see a savings of $57,688. That, my friend, is a significant amount of money. So while it can be tempting to have less of a down payment between the interest that you're going to save here and your PMI payments, that's a huge saving. I just want you to think about that as you are considering whether or not you want to follow through with that, you know, getting that uh, lower amount for the down payment. So let's move on. Let's talk about how much we should spend on a car. And don't worry, I am going to come back and we are going to talk more about how we can save for those down payments. But I want to talk about how much we should spend on a car because it can be really tempting to buy a car based upon all the things that we want to have for the car. And we may want to be buying the car based upon the brand name or the model. But the truth is, we need to actually think about how much we can spend. So, according to Money Under 30, your total transportation expenses should not be more than 10% of your monthly income. Now, there are some calculators that you can go online, you can Google, and you can say how much car should I buy, and it will allow you to put in um, your income information and the interest rate that is current. This example actually is an older example, and it shows an interest rate of 3.29. The reality is the interest rates are higher than that now. And it will tell you how much your payment is going to be. But you also need to consider how much your insurance is going to be, how much you're going to need for gas, how much you're going to need for maintenance. So you want to make sure that you're not getting yourself into a car payment that you cannot afford. I was just playing around with, daydreaming one time about a car, and when I put in the calculator, it decided my car payment was going to be something like $700 a month. That's a huge car payment. If that's 10% of your income, you're making an awful lot of money. So we want to make sure when we start to look at the cars that we're considering, we want to be prepared for that because there's so many options, especially now. The newer cars, they have heated seats, they have all leather interior, they have navigation that might come on your as an option. They might have lane assist, blind spot warnings, all kinds of really cool options. And your salesperson might have some pretty hefty, say, pretty high push on sales. They might tell you that, just for another $5,000 on this model, you can get all these additional bells and whistles. And that makes, that's great. But if that's going to take your payment to more than you can afford, you want to be very careful of that. I always suggest that anytime you shop for a car, you take someone that you trust who can help remind you of the things that you need in a car and the things that you maybe don't need. Um, I count on my husband to go with me now, but before I counted on my parents or I counted on a trusted friend that could help me to see beyond the flashiness of whatever vehicle the car salesman was trying to sell me. So you want to make sure that you're prepared for that as well. All right. So, buying a home. Let's talk about that because I know that at least four or five of you have told me that one of your goals, that where you see yourself in the next 5 years, was buying your own home. So it's important to understand that process. Um, the first thing you want to do is understand how much you should spend. If you look at government and nonprofit organizations, they're going to tell you that 28% or less of your income should be paid on mortgage, taxes, and insurance. So keep that in mind when you are considering how much of a house to buy. Because, like I said, if you go to a lender, they may pre approve you for a much higher amount than you should really get yourself into because, taxes and insurance, those things can go up over time. And eventually, you may find that you really cannot afford to stay in the house of your dreams. So, you want to make sure that you're getting yourself into a house that meets your needs in an affordable way. And again, there's that formula that says 28% of your income, no more than 28% of your income should go towards mortgage, taxes, and insurance. That does not include maintenance. So keep that in mind. Um, So HUD, the Department of Housing and Urban Development, has some fantastic resources available to you. A housing counselor can be a great resource. They're going to go into so much more detail than I can go into in an hour. Sometimes those programs are 6 weeks long, and if you go to all sessions, they may help you with some closing cost assistance. They may help you with some down payment assistance. There's a lot of different programs that are available for those of you who are first time home buyers. So you want to make sure that you take advantage of every opportunity that is made to you so that you can get the most assistance so that you can get a house that will actually work for you. So you can go to HUD.gov or you can call them at 800-569-4287. And remember, this number is going to be on the PDF when you get that form, when you get that on Monday, or when you get that on Friday, I hope. So we talked about down payments and the importance and how much money we can save when we have that down payment. So let's take a look at how we can save for that down payment. We talked in our budgeting and our spending plan session, we talked about setting money aside every month for different things. If you can make a line item to set aside a certain amount of money every month, that can really help to start you on that habit. Talking to that housing specialist from HUD that I mentioned, it's going to help you understand if there is assistance available if you do certain things. So that's one way to help to get some money towards a down payment. What if you took your income tax refund checks and instead of spending it on things that maybe aren't a necessity, what if you just automatically put that into your down payment savings account? You get cash gifts. How many of us get, 25 or $50 from our grandparents or our family members or friends for birthdays or Christmas? Instead of buying ourselves something, what if we put that into our savings account? We talked about saving dollar bills to take a vacation. What if we saved $5 bills to help pay for our down payment? Another thing we can do is have a garage sale. I don't know about you, but I've got so much stuff that I could sell at a garage sale, and putting that money straight into that account can really help to build it up quickly. And then maybe you have a hobby. Maybe you are an incredible baker, or perhaps you're really good at creating holiday decorations. What if you made those and then sold them for a profit so that you could get money to go towards your down payment? These are all a few ideas that you could use to start saving towards that down payment. I'd love to hear your thoughts on other ways that you might be able to save for a down payment. Feel free to put that in the chat, or if you're watching the recorded version, please feel free to send it to me in an email. I'd love to hear your thoughts. So once you start getting close to having your down payment saved, you're going to want to put together the loan packet. What that is, it's all the information that you're going to need to submit in order to apply for a loan. So you're going to need pay stubs. You're going to need IRS documents that are signed for the past 2 years. If you have other income like child support, or maybe you get money from investments, or you have money that comes in uh, from other, other resources. Anything that you're going to use as income to qualify you for the loan, you have to have proof of that. So if you get Social Security, disability, maybe you're collecting unemployment right now, whatever it is, all income, you need to be able to prove it. You also have to have identification. You're going to need, I think it's 6 months worth of bank statements, but it could be a year. You're also going to need your Social Security number, W-2s for the last 2 years, and if you've done housing counseling, having that certificate shows a potential lender that you have learned what it takes to be a homeowner. So that you'll need to have that in your um, application packet as well. And once you have that information together, you're going to want to reach out to several lenders and brokers. And I say several because, if you consider two or three, you can get information from them so that you understand the fees and costs that are going to be associated with your loan. You're going to want to talk to them about your specific situation and ask them if they have any ideas on something that you might have missed. And then when they come back and they have different offers for you, you're going to want, if you've interviewed 3 people, you're going to want to set them side by side and see exactly what they're offering you. So you can compare apples to apples. Um, but before you do that, it's important to make sure that the person you are working with has a license to offer mortgage loans. And you can do that by contacting my office at dobs.pa.gov, or you can go to the Nationwide Mortgage Licensing System at nmlsconsumeraccess.org. You can type in the name of the person that you're considering working with and make sure that they have a license in Pennsylvania. You also can see if they've had fines or other actions taken against them on that website. So it's a really cool way to verify that the person that you're working with is someone that you trust and you believe is going to do the best work that they can for you. So I want to caution you about um, predatory loans. When it comes to mortgages, predatory loans may offer you an interest rate that's higher than normal. They may charge you fees and points. A point is 1% of the value of the loan. So if you're borrowing $250,000, a point is 1% of that amount. Um, they may tell you that in order for you to get this loan, you have to get life insurance through this company and you have to finance it through them. And then if they offer to give you an inflated appraisal. So you've got an appraisal, the house you want to consider that you want to buy is, $335,000. And they offer to get you an appraisal that says the house is worth $500,000. That will allow you to qualify to get um, uh, you know um, a loan that you wouldn't maybe qualify for otherwise. Those are all predatory loan tactics that you need to steer clear of. We talked about predatory loans with cars where they tell you no money down. Um, Make sure that you are working with someone who's reputable and is going to get you the loan that's right for you. All right. So emergencies happen and you need to be prepared for those because you want to avoid easy money loans. So payday loans and car title loans, number one, keep in mind they are not legal in Pennsylvania. There are some lenders that offer short-term loans, but the traditional payday loan often charges 5 to 700% APR when we figure out the APR. That is an incredible amount of money, and I have seen it get people sucked in to a vicious cycle, and they ultimately end up losing in the end. And you don't want to use an easy money loan to get you out of a financial bind. So if you're facing an unplanned emergency, there are other things that you can do. Maybe instead of paying your utility on time, you reach out and say, you know what? I've had an emergency. I've got to put my money towards something else. Can I pay my electric bill 2 weeks late? Um, Maybe you can borrow money from family or friends. There are many nonprofit or religious organizations that offer assistance. Reaching out to them as early as you can when you become aware of the financial trouble is going to give you the best opportunity to get the financial assistance that you need. Also, reaching out to your lender and just saying, listen, I've lost my job, and I'm going to have trouble making my mortgage payment this month. But I should be working again in this time frame. I'll be able to catch up this payment. I anticipate being able to catch up the payment at this time. Doing that goes a lot further than ignoring it or again taking out those high cost um, loans that we just mentioned. All right. So I want you to understand never hide from the emergency. Reaching out to those local agencies can be an incredible help. So you can dial 211 from your cell phone or your home phone, and that is going to put you in touch with an operator who has access to the resources that are available in your community. They'll take information from you and then they'll give you some referrals and tell you where you can go to get some help. You can also go to your favorite search engine and search online for a nonprofit or community action agency or a housing counselor in your county or in your city. Um, HUD.gov has, again, they've got some great resources for preparing to make that purchase, but they also have some great resources for individuals who are facing financial struggles and maybe aren't able to make some of those payments. And again, you can reach out to our office The web address is www.pa.gov/DOBS. And I will be correcting that website on the slides before I send those out to you. So that actually concludes the formal portion of our presentation. I want to thank you for your time. My name is Katrina Boyer. I'm the Investor Ed Coordinator at the Pennsylvania Department of Banking and Securities, and it has been a pleasure presenting for you today. I am going to stop the recording so that we can go into our discussion questions. So sit tight while I stop the recording.